Okay, on that note, let's get started with the corporate conversations that we have lined up on the show. The first one with the management of Atul Auto. We've got Mr. Jitendra Adhya, the president of Atul Auto, joining us on the show. Mr. Adhya, hi, morning, and thank you so much for your time. You know, we've heard yesterday about the Delhi EV policy, big positive coming in for your company. Now, to talk a little bit about this policy, the Delhi EV policy mandates only electric three-wheeler registrations from Jan 2027. Help us understand how significant is this an opportunity for the company and how are you preparing to capture this demand?
Thank you for having me on this show. Yes, it's quite positive for the industry, three-wheeler industry, and in particular Atul Auto as well, as we are into all fuel and particularly with hype in EV. We expect that definitely it is going to help us in a great way. We are there with our all multi-fuel variants across entire country. And for electric, particularly, we have our own fixed battery model. We got swappable and fast charging also in place. So putting all together, definitely it's going to be a good opportunity for Atul Auto.
Okay, good opportunity for growth. That's the word coming in, Mr. Adya. Good morning, Ashesha this side. Can you quantify the benefit for you? And do you expect your diesel and CNG portfolio to see a big dent as a result of these EV policy and the fact that perhaps EV sales could go up, but other sales could actually decline as a result of this revised policy from Delhi government?
Very good morning to you as well. Look, we definitely have all fuels available in our product portfolio, but in particular Delhi and NCR, we are not there with the diesel or not in a great way with CNG. So actually, it is not going to dent overall numbers for Atul. That is point number one. If you look at my entire sales composition, almost one third comes from electric. So once such kind of policy boosters are in place, I'm sure that it will be beneficial in a short to long term for organization.
Okay, so that sounds good. Mr. Adya, do you also believe that Delhi's policy could become a blueprint for other states? And if that happens, how well positioned is Atul Auto to capitalize on a broader shift towards electric three-wheelers?
Yes, it can be definitely, kind of a thing where other states can follow this policy in a time to come. I believe we need to keep little more patience once, it is stabilized, particularly for Delhi. The other states will definitely going to follow it. And as long as Atul Auto is concerned, we are all set with our infra, we are all set with our capacity. We have our all, entire supply chain lined up. So all in all, we are there to definitely contribute for this booster and we are going to be benefited.
Mr. Arya, how much revenue do you generate from Delhi NCR region in particular? And as a percentage of total sales, how much do you generate from electric vehicles?
As a overall, we have approximately 28 to 30% comes from electric sales. In particular, Delhi, we don't have, as of now, we don't have presence, but we are there in NCR. And we very soon we expect that we will have our own footprints in Delhi and other regions as well.
Okay, and with purchase subsidies and perhaps a clear roadmap that the Delhi government has now put into place, already seeing higher inquiries and stronger order visibility as compared to what it was earlier?
It's already there, and obviously with this policy, I expect to be go up a bit higher. So definitely it is going to be demand booster.
Okay, understand that. Also, Mr. Adya, your partnership with Exponent Energy that envisages a supply of about 15,000 electric three-wheelers. What is your timeline on that execution and how is that going to help you capitalize the opportunity that you're seeing in Delhi now?
This is for first 3 years, but I believe
Sure.
we are going to definitely going to grab the volume well before the deadline. And since these kind of enablers are there in the market, we expect that it will be very minute numbers, 15,000 or so, because 15 minutes charging it is as good as you are fueling your vehicle at conventional dispensing center. So this numbers is initially just to start, but I expect much better volume from this particular tie-up. Apart from that, we have our own single battery, dual battery, fixed battery solutions available, and we do have a tie-up for swappable battery with Honda. So this all possible options where consumer can definitely buy at their ease and as per their budget. We believe that Atul Auto will be greatly benefited.
And consequently, what will your FY27 revenue growth guidance be? You reported about 824 crores of revenue in FY26. And of course, the growth rate was also very strong in FY26 on a year-on-year basis. Will that continue this year as well?
I believe we will be definitely able to deliver much better than what we delivered last year. But really difficult. It's just a beginning of the year. We are about to end the first quarter. So let us wait for another couple of days to see the first quarter result. And I am quite confident that we will be able to deliver much better numbers and volume for FY27.
14% was the revenue growth in FY26. So we can assume that it has to be at least better than 14% in FY27. Am I getting you right?
Let's hope so.
And what about margins in that case? Are you expecting any kind of margin expansion this year?
We will be benefited from, compensation of fixed costs, obviously, and but there is a small challenge. There was a volatility in terms of, raw material price. But thanks, it was for quarter one, so we have, 3 quarters pending to recover and deliver much better numbers.
So, Mr. Adya, on the margins front, would you at least be at 10%, which was your margin number for FY26, if perhaps not higher, or if it's higher, any number you could share with us?
I believe we will grow than what we delivered last year. It is really difficult to give you the exact numbers, but will be better than what we did last year.
Okay, so that's the view coming in. So margins are expected to be better than last year, and growth for FY27 is also likely to be better than 14% that the company reported in FY26. And Delhi government's EV policy is also likely to be a major booster for demand in the Delhi NCR region. Mr. Radia, thank you so much for taking your time out and joining us here on ET Now. On that note, we need to slip into a very short break, but we'll touch base with the management on the other side. Don't go anywhere.